Hey, Steve Saretsky here. As always, this is the Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask is that you hit thumbs up, subscribe. Appreciate the support. As always, if you have any comments, feel free to put them below and we'll banter back and forth. A little bit of housekeeping. First off, the Vancouver Real Estate documentary that I did with Real Vision TV, that is now out. So if you have a subscription to Real Vision, feel free to go and check that out. If you don't have a subscription, I'll be getting a public link in the next couple weeks, so I'll share that with you guys. But I do encourage you, if you enjoy finance, economics, investing, that sort of thing, I highly encourage the subscription. I think it's really worth it. I'm on there. Anyways, I'm going to keep this video a little bit shorter. If you missed the updated changes to the BC speculation tax, I did an interview with BNN on those earlier this week, so you can go and check that video out. But basically, I'm going to quickly summarize some of the changes here, and then I'm going to jump into a little bit more important data as we move forward into really the full-on spring market. So first off, the NDP revised some of the areas that they're going to target. They also lowered the speculation tax for certain people. So how this works is basically they revised it down to basically exclude remote cabins, smaller areas, resort towns such as Whistler, etc. Whether they're going to focus is Greater Vancouver, the Fraser Valley, Victoria, I believe Nanaimo, and Kelowna. So like the big main areas. And then they revised the tax down. So let's look at the 2019 numbers. So starting in 2019, even though it's going to be prorated in 2018. So in 2019, the speculation tax for BC income taxpayer will drop from 2%. They revised it down to 0.5%. And then you have to rent it out for a minimum of 6 months to be exempt from that 0.5% on a second property. And also you get a $400,000 tax credit. So basically, as I understand it, even if you own, say, a summer cabin in Kelowna that was valued at, or a condo valued at, say, $395,000, and you didn't rent it out, you'd still get that tax credit and be exempt. That's how I understand it anyways, but speak to a tax lawyer because I might say something different. So that's that. Basically, how I'm looking at it is from other areas. Now look at if you're an income taxpayer that is paying and living as a primary residence in, say, Alberta or Ontario or any other province in Canada, you're actually going to have to pay a 1% speculation tax. So every year you're going to pay a 1% speculation tax unless you're renting out your property for a minimum of 6 months a year. So obviously areas can be impacted like Kelowna. So if you're not going to rent it out and you're not going to sell it, you're going to pay on a $500,000 home value. You're going to pay $5,000 annually just to carry that property. So I think this could create some forced sales. You know, that's the reality of the situation. I'm not going to get into the politics of it, whether I agree with it or disagree with it. It really just depends on how you lean politically. But obviously when house prices have reached these egregious levels, governments always come in and they usually end up going way too far and ultimately exacerbate a correcting market. But again, this is just me pontificating. I'm a pretty big history buff, so I do like to go back and study governments and how they tend to come into markets and usually pander to a voter base. But again, this is again not me being for it or against it. I think that you've reached a certain point where the market is totally crazy. But that speculation tax has not changed, just as an FYI, for satellite families and, say, U.S. citizens that are investing here. It is going to be an annual 2% speculation tax if you're not declaring BC income tax. So again, I think that's substantial. You're throwing a lot of taxation on the market. As I've said before, if you're a foreign buyer and you're purchasing a $3 million home in Vancouver, you're going to be paying close to $700,000 in taxes just to close on it. Now you're throwing obviously a 2% tax to carry it every year. So this sort of thing is going to add up, and we're seeing that in the numbers. Now, you can take these numbers that I'm going to give you with a grain of salt. You can interpret them how you wish. At the end of the day, I don't really care because I don't have anything to sell with you. You can decide to buy, you can decide to sell, you can decide to invest, or whatever. There's no agenda here. I just don't, like, it's just me basically giving out what I'm seeing in the market and how I feel about it. So if you look at the first quarter, and again, I just enjoy this because it's like a passion where you're not going to get these numbers from anyone else. So maybe other people are afraid to tell you, or there's vested interest. I get it. It's difficult, but I think in order to build the trust and the brand, I think that you always have to be transparent. It might not always be in one's best interest. So that's my thesis on everything. So when I give you these numbers, that's where it's coming from. So Q1 of 2018, so January, February, March, Q1. If you compare Q1 of 2018 to all the other first quarters over the past 20 years, so that's, you're comparing apples to apples essentially. Greater Vancouver detached sales came in at a 20-year low for Q1. Now, granted, these numbers are as of March 30th. Because it's a long weekend, these numbers are not going to change. The board's not working, so they're not processing any more sales. So Q1 2018, the last 20 years, these are the fewest sales in Greater Vancouver. So Greater Vancouver, obviously that includes a wide spectrum of areas. It not only includes Vancouver, Richmond, Burnaby, Coquitlam, Port Coquitlam. There's a huge data field there. This is not just like one sub-market. This is not just like a luxury pocket. I'm talking about like all of the detached houses in Greater Vancouver for the first quarter registered the fewest sales. So again, that's how I'm seeing the market. Now you're going to throw on more and more. You're going to throwing on more taxation on top of that. People say, well, prices aren't down that much. Higher up you go, it's coming down. It's down about at least 10 to 15%. Now, of course, nobody is excited about slashing their price right away. You're seeing a lot of people that are still listing at 2016 prices that are, in my opinion, either wishful thinking or they're not properly informed on the market. These are people that are maybe expecting a turnaround in the market, holding out, or flippers that are trying to get back their money. I mean, I just look at this market and I go, okay, so your detached sales have been trending down for a while now. They've now registered the lowest sales in 20 years. You have higher interest rates coming in. You're very late in the economic cycle. You have more taxation on top of that. You really have global property markets starting to slow down, and you are sort of holding out thinking you're going to get your price in 3 months or 6 months. To me, it seems asinine. I think the properties that are selling are people that are willing to take a price cut. Now, again, nobody knows for sure where markets are going to go, so I'll grant them that. But that's the reality of the situation, and you can start to see that really in speculative flips. So obviously, as sales come down, it creates more of a liquidity crunch. Banks start seeing slower and slower and weaker sales. This eventually they're going to figure out. This is going to come more into their data. Lending is going to continue to get tightened because banks ultimately lend into property booms. As prices rise, banks are more comfortable lending. They're just like anybody else. They play themselves into it, and they pull themselves out of it as it starts to come down. So that's just how banks function. That's just how they lend. There's a risk premium if prices start coming down, and they reflect that in interest rates. So you can debate and argue with it, but that's just the reality of the situation. And so you're starting to see that not only in weaker sales, but in speculative activity. So for Vancouver detached homes, now I'm looking at Vancouver, not Greater Vancouver, because I just pulled this data. Vancouver detached flip. So again, a flip is something that's bought and sold in a 24-month period. Vancouver detached flips fell to their lowest total of any month dating back to November 2008. Now obviously here we are in March, which is generally a busier year. I believe based on the chart you can see that detached house flipping in this most recent cycle peaked in March of 2016, which was arguably the top of detached prices. It was the peak of activity. It was when we had basically shadow flipping, and then Christy Clark came in and banned it. That was really like the peak flipping activity, and so that almost coincides with really the peak of the detached market. Now I will say, on a counter argument, that is the detached market. We're still very much living in two very different markets. The condo market is still, in my opinion, red hot. We're starting to see weaker sales. They're going to definitely come in lower in 2018. But at the end of the day, there's still no inventory. There's still quite a few buyers out there that are, and so this is still creating bidding wars. The March numbers, as of in March, 49% of Vancouver condos sold over the asking price. So yes, you can argue that realtors are maybe pricing them a little bit lower to get those multiple offers, but they can really only do that. That tactic only works if there's enough demand there to push the asking price up and over. So to me, that's really a market indicator that there's still a lot of demand out there for Vancouver condos. And I think it's, again, we're seeing weaker sales on that condo market, and so we're starting to see more completions coming from these pre-sales. So I think that, to me, even in the Vancouver condo market, we're starting to see prices really start to slow. You're not really seeing that crazy growth anymore. I think you might get a little bit of price growth this year in 2018. Again, we'll wait and see how this all shapes up. But yeah, we can see the market is definitely changing. And again, everything is moving and changing relatively quickly with more and more policies being implemented. Central banks hiking interest rates, etc. There's really a lot to watch for in this market. So as always, I will keep you updated on that. If you have any questions, comments, concerns, I'd love to hear that. Otherwise, I'll see you next week.